All right, let's talk about building wealth. Today, we're going to demystify one of the most powerful tools out there, the Exchange-Traded Fund, or ETF. We'll break down exactly how this simple idea can help you master the market. So, let's get right into it.
You know, for so many of us, the whole idea of investing just feels complicated, right? You hear about the market rocketing up, then crashing down, and it feels like this exclusive club with its own secret language.
I mean, does the stock market just feel totally overwhelming sometimes? If you've ever felt that way, trust me, you are not alone. It can seriously feel like you're playing a high-stakes game where you don't even know the rules. And that fear of making a costly mistake, yeah, it can be paralyzing.
Okay, but what if I told you there's a way to cut through all that noise? A proven way to own hundreds of companies all at once, super simply, and for next to nothing. And get this, without ever having to pick a single winning stock.
So here's our game plan for today. We'll touch on why investing can feel so tough, then we'll get into the simple solution, ETFs. I'll show you the core toolkit you need to get started, how to build a simple portfolio, and then, super important, the big mistakes smart investors know to avoid.
All right, so that simple, low-cost way to invest I was just talking about, it's called an exchange-traded fund. And honestly, it's the elegant solution to all that complexity we just mentioned.
So, what is an ETF? Well, think of it like a shopping basket. But instead of groceries, this basket holds a whole collection of investments, hundreds, sometimes thousands of different stocks or bonds. And the best part? You can buy or sell this entire basket on the stock market with a single click, just like you would a single share of, say, Amazon.
Let's put that into perspective. If you buy one share of Apple, all your eggs are in the Apple basket, right? Your success is tied to just one company. But if you buy just one share of an S&P 500 ETF, you instantly own a tiny little piece of 500 of the biggest companies in the US. That, my friends, is the magic of instant diversification.
And here's where it gets even better. It is ridiculously cheap. ETFs have something called an expense ratio, which is just a tiny little annual fee for managing the fund. For a lot of these big market ETFs, we're talking as low as 0.03%. Let me break that down. For every $10,000 you invest, you're paying about $3 a year. That's it. It's an absolute game changer.
And why does this matter so much? Because it gives you direct access to the incredible power of the stock market over time. Historically, the US market has delivered average returns somewhere in that 7 to 10% range. Now compare that to what you get in a typical savings account. It's not even a contest.
So, let's just recap for a second. Why are ETFs so perfect for most investors? You get instant diversification, the fees are incredibly low, you get access to those strong historical returns. On top of that, they're built to be tax efficient, which is a huge plus, and they're super easy to buy and sell anytime the market is open.
Okay, so you're probably thinking, this sounds great, but where do I even start? Which ones do I buy? Let's build out your core toolkit. And the good news is you really only need a couple to get started. All right, here are the 3 pillars for a really simple but super effective portfolio. First up, you've got an S&P 500 ETF. This is your foundation for growth. It tracks the 500 biggest US companies. Now, if you want to go even broader, there's the Total US Market ETF. This one gives you a piece of literally thousands of companies, big and small. Maximum diversification. And finally, you've got a US Bond ETF. Think of this one as your stabilizer. It's there to add some calm and reduce risk when the stock market gets a little crazy. That's pretty much your starting lineup right there. Okay, so we have the pieces. Now, how do we actually put them together to build a portfolio? The best part about this is you absolutely do not need to be a financial whiz to do this well.
Here's a look at a classic, simple, long-term portfolio. You might put the biggest chunk, say 70%, into a broad US stock ETF for that long-term growth. Then maybe 20% in a bond ETF for that stability we talked about. And that last little 10%? You can use that for other things you might be interested in, like international stocks or dividend funds. The main idea here is balance.
You know, long-term success really just boils down to 3 simple rules. Rule number 1, keep it simple. Just a few core funds is all you need. 2, stay diversified across different things like stocks and bonds. And 3, just check in maybe once a year to rebalance your percentages back to your target. That's it. No need to be constantly fiddling with it.
And that brings us to our final, and honestly, probably the most important section of all. Because long-term success with investing, it has way less to do with being brilliant and so much more to do with just your behavior.
These are the classic traps, the mental mistakes that sink so many well-intentioned investors. You know, chasing after whatever's hot this month. panic selling the second the market takes a dip, or thinking you can perfectly time the market, selling at the very top and buying at the very bottom. The smartest investors just don't do that. They stay the course and focus on the long game.
And really, that's the main takeaway here. This isn't about knowing some secret formula that nobody else does. It's all about having the right mindset. It's about being disciplined, being patient, and thinking in terms of years, even decades, not days and weeks.
Look, ETFs have made smart, sophisticated, long-term investing something that is truly accessible to everyone. They are simple, they are powerful, and they are proven. Your journey to building real wealth can start with just one simple decision. So the real question is, what's it going to be?